I don't really consider that this cycle has hit any of the extremes of prior cycles. And so the combination of being pretty positive on liquidity for call it the next 18 months and not really seeing too much excesses in the Bitcoin space currently, my base case is bullish on Bitcoin over the next 18 months. My base case is Bitcoin going to see 100K. I'd be surprised if we don't hit six figures in this cycle. Whether it's 18 months, if I give myself some extra room and say 24 months, I'd be surprised if we don't hit six figures.
Lyn Alden emphasizes that the most significant factor influencing Bitcoin's price is global liquidity, which she measures using the global broad money supply denominated in dollars. This metric captures both credit creation and the impact of the US dollar index, which is crucial given the extensive dollar-denominated debt worldwide. Alden's research shows a strong correlation between Bitcoin's performance and global liquidity trends over 6 to 12-month periods. When global liquidity is expanding, Bitcoin tends to perform well. Conversely, when liquidity contracts, Bitcoin often struggles. Alden's analysis suggests that Bitcoin can be seen as a macroeconomic asset, sensitive to broader financial conditions. While short-term price movements can be influenced by various factors over a 12 to 18-month horizon, the direction of global liquidity serves as a strong indicator of Bitcoin's potential performance. This understanding forms the basis of her optimistic outlook for Bitcoin over the next year and a half. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So generally speaking, in the next 12 to 18 months, I'm fairly bullish on it. Generally speaking, the biggest correlation I found to Bitcoin price is global liquidity. And there's multiple ways to measure global liquidity. The one I tend to use is global broad money supply denominated in dollars. And so there's both a credit creation component and a dollar index component to that liquidity measurement, which is relevant because of how much dollar-denominated debt exists in the world. And generally speaking, when that's doing well over a given 6-month period, normally Bitcoin's doing well over a given 6-month period or 12-month period. And when that's doing poorly, usually Bitcoin's not doing great either. That can't really tell you what's going to happen on a given week or even a given quarter. But over a 12-month period, if you have a high conviction on the direction of global liquidity, generally speaking, Bitcoin is a good way to express that, especially if you look at other Bitcoin-specific indicators. So if you look at, for example, the market capitalization of Bitcoin relative to the realized capitalization of Bitcoin, which is another way of saying the on-chain cost basis of Bitcoin. So every coin priced the last time it moved on-chain in dollar terms. You can look at the multiple between market cap and then the cost basis during those really big bull market tops that generally have a 3-year correction after them. Usually you get a very high gap between market cap and realized cap. So far, we've not really hit any of those extremes in this cycle. In addition, whenever you have a really strong bull market, you do generally get selling from longer term holders. Someone bought Bitcoin 5 years ago and they might be up 5x in their position. Maybe they want to buy a house and start a family, or maybe they just want to diversify to some extent. Maybe Bitcoin's now 90% of their net worth and they want to trim it back down. You start to see selling pressure from those longer term holders that are significantly up in their price action, and that kind of exhausts some of the incoming demand eventually. That's kind of what contributes to the bull market's ending, along with liquidity rolling over. And so far in this cycle, there's only been kind of a modest amount of that longer term selling. So I don't really consider that this cycle has hit any of the extremes of prior cycles. And so the combination of being pretty positive on liquidity for call it the next 18 months and not really seeing too much excesses in the Bitcoin space currently, my base case is bullish on Bitcoin over the next 18 months.
How bullish?
I mean, I'd be surprised if we don't hit six figures in this cycle. Whether it's 18 months, if I give myself some extra room and say 24 months, I'd be surprised if we don't hit six figures. We could go way north of that. Like we could, I wouldn't find it inconceivable to go well into the six figures, but I try to have conservative estimates. And I would say that generally speaking, if we're having a conversation 2 years from now and we've still not seen 100K, despite having a positive liquidity cycle, I'd be surprised. If something happens to impair the liquidity cycle, like let's say some war breaks out and the dollar index spikes to 110, or if you get an event like that, kind of like how in 2019 anyone predicting that what was going to happen next year would have been blindsided by COVID. So if you get something like that prevents global liquidity from going up like I expect it to, that would not surprise me to see Bitcoin have a rough time. But I would be surprised not to see Bitcoin notably north of here if we do have another 18 months of rising liquidity. Dollar strength is pretty much by definition a really bad liquidity event because there's so much dollar-denominated debt. And so what that represents is basically the unit of account of liabilities increasing sharply, right? So that's almost by definition a negative liquidity event, especially the way that I define it, which is global broad money supply denominated in dollars. So whether you look at it practically or however you define that metric, a very sharp and strong upward move in the dollar is generally bad for liquidity. So you would generally not expect, even gold might not do very well in that environment, but gold would probably hold up better than Bitcoin. Bitcoin and most fairly volatile assets would probably suffer in that kind of dollar spike. And that could be war related. That could be a big credit event in some pocket that no one's really looking at the moment. Usually these things emerge from not whatever people are focusing on. So, that's kind of, if I would imagine how I'm wrong, like if I picture, okay, my base case is Bitcoin going to see 100K. If I think, okay, what are the things that happened if I'm wrong? Well, one is, that basically we did not get that liquidity as expected. We got a big dollar spike, or we got some sort of, geopolitical event related to energy or related to war or something, or some sort of big crackdown on Bitcoin. Something like that would be reasons why Bitcoin doesn't hit 100K. Is basically that my base case ends up being incorrect.
Bitcoin does have characteristics that align with those of a safe haven asset, particularly its portability and the ability to self-custody funds. Alden points out that Bitcoin's unique advantage lies in its ability to be transported globally through the memorization of a private key, a feature unmatched by traditional assets like gold. While Bitcoin is still an emerging store of value, its finite supply and decentralized nature position it as a potential hedge against long-term currency debasement. Alden notes that as Bitcoin continues to mature, it could increasingly fulfill the role of a safe haven asset, particularly in a world where digital assets are becoming more relevant.
So I don't define it as a safe haven asset per se because most people don't understand how it works. Most people can't tell you what the halving is. Most people can't tell you how the 21 million code is enforced. Most people can't tell you what the block size limit is or what the block time is. It's not a very well understood asset yet, despite the fact that it's 15 years in. Now, the aspects where it's a safe haven asset is that if you self-custody Bitcoin, regardless of what its price is doing, if price could go up or down by 20, 30%, fairly short, but you have global capital that you can bring with you anywhere. But you could memorize 12 words, right, representing your private key, and you could bring your money and almost anywhere in the world where you can eventually reconstruct it with any sort of internet access at all. So that's the safe haven element to it. But because it's still an emerging one, it's still an emerging store of value, it's more volatile than something that's already reached its total addressable market because it's kind of priced like an option. It's priced on the probability that it's going to reach somewhere closer to its total addressable market, which I think is well north of here. And so because it's priced like an option, it has that issue. So I would describe it as it's mostly a liquidity correlate. And so if there's a risk-off event or some sort of crisis event, it depends on whether that crisis is pro-liquidity or negative liquidity. Most crises are bad for liquidity, but there are some that are good for liquidity. So for example, the March 2023 regional bank crisis was actually good for liquidity because the Fed and the Treasury had to pretty much step in that weekend. So actually the week leading up to that was fairly bad for liquidity, and Bitcoin was not performing well in the run up to that banking crisis. But as soon as that banking crisis materialized, within a couple hours, Bitcoin was actually doing quite well because the whole market was pricing in, kind of a partial Fed pivot, a Treasury pivot. And so Bitcoin actually did pretty well when the US banking system was running into stability issues. But on the other hand, if you get like a geopolitical event and dollar index spikes from, 101 to 103 or 104 or something like that, that's generally an anti-liquidity crisis. And Bitcoin usually does not do very well, at least in the near term. So for example, when we had the yen carry trade hiccup in the markets a few weeks back, Bitcoin had a really bad 24 hours. It already rebounded back to what it was before that event. But as one of the only sources of liquidity on a Sunday night, it was sold because it could be. So on the one hand, it kind of served its purpose as a safe haven asset, that if you were holding Bitcoin, you had access to liquidity on a Sunday night, and it's the most liquid version of that. Technically the other cryptocurrencies do too, but they're much lower liquidity, they're much less secure. So you have the most liquidity on a Sunday night. But the downside is if you're just kind of holding through that, you can take a 15% price haircut overnight, which, if you have spare capital available, you can use as a buying opportunity. But I think that basically it's on its way to being a safe haven asset, but it's still small and still kind of, dispersely held and still something that's kind of being explored. I think it's we don't have obviously the long-term track record of those other decades like we do with gold or with energy, but it fulfills a similar purpose, which is that it's money with a finite supply. There's some disadvantages relative to gold, that it's got a shorter track record. It's a different type of money, but it's got some advantages, which is that it's globally portable, much easier than gold. It's got a lower supply inflation rate than gold, and I would say it's still below its total addressable market. So it's still held by very kind of a small percentage of people in any meaningful capacity. And so I think now Bitcoin is in that bucket of probably harder assets you want to hold if you expect ongoing currency debasement. If you expect positive real rates for foreseeable future and you expect good equity growth, then that's kind of a case to just you can own equities, you can own those types of assets. But if you do expect long-term currency debasement and kind of risks from all this kind of policy materializing, that's where assets like gold and Bitcoin and things like energy producers can come in really handy for a portfolio.
Alden concludes by emphasizing Bitcoin's correlation with liquidity events, noting that its performance often hinges on whether a crisis is pro-liquidity or anti-liquidity. For instance, during the March 2023 regional bank crisis in the US, Bitcoin benefited from the Federal Reserve and Treasury's intervention, which improved liquidity conditions. Conversely, a sharp rise in the dollar index or a significant geopolitical event could trigger an anti-liquidity crisis, adversely affecting Bitcoin's price. Bitcoin's behavior in these scenarios underscores its dual nature as both a speculative asset and a potential safe haven. While it offers liquidity in times of need, it also carries the risk of significant price volatility, making it a complex asset to navigate for both new and experienced investors. Please like and subscribe my channel.